Let's get to a big call out from Wall Street. RBC Capital Markets seeing more downside risk for tech, downgrading tech to market weight. That's down from overweight. Now the analyst there, Lori Calvasina, saying that after a massive rally in 2023, the tech sector's valuations are clearly expensive for the median stock in this sector. Break it all down. We have Yahoo Finance's reporter Josh Schafer. Josh, what does everyone need to know and keep in mind when this is one of the biggest risks you could say to the broader market?
So keep in mind, I would say, when we talk about market commentary, when we talk about how Wall Street ranks these sectors, remember, you can only be overweight so many sectors, right, Shauna? And I think that's an important thing to highlight here. They're going from overweight to equal weight on tech. They're not going underweight here. They're not saying tech is not a place to be. Just maybe there's better places to be. And I think even when we think about the recent calls on Apple, right, that's a way to understand sort of how Wall Street commentary works. It's not necessarily saying sell the stock or sell the sector, but maybe you can make more money elsewhere. And when you think about what else RBC moved up here, so you take a look at tech, they downgraded tech, they upgraded consumer discretionary, and they upgraded utilities to overweight. You take a look at those three charts over the last year, guess what? Tech outperformed consumer discretionary and tech outperformed utilities, right? So it's not that hard to look at that chart and understand if we were thinking what's got more room to run here, it's probably not tech, right? At a high level, that's sort of a way to understand this call. But one other thing that they highlight in here is sort of saying a positive on tech. They talk about revisions to EPS, revisions to earnings per share, and the overall outlook for fourth quarter earnings. There's a great chart out from Deutsche Bank I want to highlight here that shows earnings revisions that we're seeing for the current quarter. See all those negatives on your left? Brad, what's the only one that's positive there?
Oh man,
Tech,
it's tech
right?
At the bottom.
It's tech at the bottom.
Wow.
So when we're talking about earnings revisions, the only sector that held up over this big slash of earnings revisions we've been talking about going into Q4 was tech. Now again, you could still argue the stocks are quote unquote overpriced, but people think earnings are going to be good. People like sales in the sector, so I wouldn't quite go ringing the alarm bell on tech necessarily.
All right, certainly. And it also kind of goes back to what we've been hearing just in terms of some of the calls that have come out from Wall Street over the last week or so on Apple, right? A lot of those analysts raising some questions just about valuation, not exactly saying we'll see a huge move to the downside, but we'll likely see maybe some trend here along the flat line given the massive run.
You have Apple trading near an all-time high, right? At some point, it's hard for the path forward for these stocks to just be up, and up, at least in a short time period.
Yeah.
I mean, Apple trading near $200 a couple weeks ago, it's a price we've never seen, right? And then the calls from the bullish analysts out there are for 220, 230. You're asking for a lot at some point to happen very quickly. Patience always helps.
And here we are today, right around 185 a share. All right, Josh, thanks so much for breaking that down.